Welcome to Talk Tickers. This is the show for the professional investor class.
We're not here to just read you the press releases.
No, we're here to strip them down, find the leverage, and really look at the capital flows that are actually moving the tape. Today is Saturday, February 7, 2026.
And today we're dissecting a situation that by all rational metrics just shouldn't be happening. We're looking at a divergence between fundamentals and price action, that is. Well, it's so wide you could drive a truck through it.
It is a complete paradox. It really is.
Right.
It's the kind of setup that makes you look at your terminal and wonder if the data feed is broken.
Or if the market's just gone crazy.
Or if the market has collectively lost its mind.
Yeah.
We have a company on the board today, SK Telecom. Ticker is SKM on the NYSE.
Or 01767 if you're on the Seoul Exchange.
Right. And they just dropped an absolute horror show of an earnings report.
It's a bloodbath. I mean, there's just no way to sugarcoat this print. It's terrible.
We are talking about a 73% plunge in net income. A 73% plunge. We're looking at a dividend slash that basically cuts the yield in half.
Which for a telecom, I mean, that sector is essentially a bond proxy. That's usually a death sentence for the stock.
It's a death sentence. And just to make sure the disaster is absolutely complete, they are navigating the fallout of a cybersecurity breach that makes the Equifax hack look like a minor clerical error.
It's a whole other level.
27 million records. Just gone.
So on paper, this is a sell rating. It's a run for the hills kind of rating. If you ran this through a standard quant screen, based on trailing 12-month operational metrics, the algorithm would short this stock into the ground.
It would short it to zero. And yet, here's the hook. Here's why you are listening to this deep dive right now. Despite the collapsing income, despite the angry regulators circling like sharks,
the stock is tearing to a 52-week high.
A 52-week high. It's up over 12% recently. The pre-market is buzzing. The tape is telling a completely fundamentally different story than the income statement.
That's because the market has stopped looking at SK Telecom as a telecom company. It's really that simple.
Yeah.
If you are analyzing this based on average revenue per user ARPU or, SIM card sales, you are missing the trade entirely.
You're looking in the rearview mirror.
Completely. This isn't a utility story anymore. This is a hidden asset story.
Which brings us right to our thesis for today. We're looking at a legacy carrier, a dinosaur of the connectivity age, that is morphing right in front of our eyes into a proxy vehicle for the hottest pre-IPO AI company on the planet. Anthropic. So we're going to explore how management is essentially financializing a crisis. They're taking a massive company-threatening hack and turning it into an accounting maneuver.
And at the same time, they're leveraging a lottery ticket investment they made way back in 2023 that has just gone exponential.
It is cynical, it is sharp, and it is exactly the kind of setup we love. We aren't here to cry about data privacy today. I know that sounds harsh, but...
Well, we're here to analyze the money. That's the job.
We're here to analyze the money. We are here to see how you can profit from a situation where a company loses the trust of 27 million people, but somehow gains the love of Wall Street. So let's get into the numbers.
Okay, let's start with the event summary. We just got the full year 2025 numbers. And like I said, if you were a traditional dividend investor, the widows and orphans crowd that buys these telcos for yield.
Oh, they're furious.
You're probably throwing things at your screen right now.
Absolutely. Give us the damage report. Just lay it out.
All right. Net income is down 73.0% year over year. That brings it to 375 billion won. For a company of this size, a 73% drop isn't just a bad quarter.
No.
It implies a structural break in the business model or, a massive one-time shock that's just cratered the bottom line.
And it's not just the net income. The operating income took a huge hit, too.
A huge hit. Operating income plummeted 41.1% to just over $1 trillion. Revenue is also sliding, down 4.7%. So you have falling revenue, collapsing operating income, and net income that's just evaporated. This is a business in contraction on every single level.
And then there's the dividend, the sacred cow of the telco sector.
Right. Telecoms are supposed to be safe havens. They're boring. You buy them, you hold them, you collect the coupon. That's the whole thesis.
And they just took a knife to it.
They slashed the total payout from over 753 billion down to 353 billion. The yield dropped from a really juicy 6.4%, which is why most people owned it in the first place, to a pedestrian 3.1%.
3.1%.
In a normal world, that is a signal to liquidate the position immediately. You can get 3% in a savings account right now without any of the equity risk.
Exactly. You don't hold a utility for growth usually. You hold it for the income. If the income gets cut in half and the growth is negative, the entire investment thesis is broken.
It's completely shattered.
But we have to look at the why behind these numbers.
Yeah.
This isn't just, operational inefficiency or a few people canceling their phone plans. This is the bill coming due for a cybersecurity catastrophe.
And it's a catastrophe that has been festering for years. We need to be really specific about this breach because the scale of it is just staggering. The headlines say hack, but the details are so much worse.
Okay, so break it down. What actually happened?
The hackers were inside SK Telecom servers for nearly 4 years.
4 years.
4 years. From August 2021 to April 2025.
That's not a breach. That's a residency.
Yeah.
They're practically paying rent.
They weren't just visiting, they moved in. They used what's called an advanced persistent threat, or an APT. This wasn't some kid in a basement. This was a sophisticated patient actor.
So they didn't just smash and grab.
Not at all. They infiltrated using 33 different types of malicious code. They didn't just take what was on the surface. They systematically mapped the entire network, found the valuable data, and then extracted it slowly over time to avoid detection. It represents a total catastrophic failure of their perimeter defense and their internal monitoring systems.
And what did they get? Because customer records is such a vague term. Are we talking about email addresses or something that actually matters?
Mm-hmm. Oh, they got the crown jewels. They stole 26.96 million customer USIM records. Now, for context, South Korea has a population of about 51 million people.
So if you account for SKT's market share,
this is effectively the entire user base of the carrier. They got phone numbers, they got the unique IMSI identifiers.
Explain that one for the listener who isn't a network engineer. What's an MSI?
The IMSI is the unique ID for your specific connection to the network. It's how the tower knows it's you. But the critical piece, the real disaster, is that they got the USIM authentication keys.
The keys. And why is the USIM key so dangerous?
Think of the USIM key as the digital passport that tells the cell tower, yes, I am who I say I am. It's the cryptographic handshake that secures your connection.
So if I have your key.
If I have your USIM key, I can potentially clone your SIM card. It's called a SIM swap attack, but this is even worse. It's a direct clone. If I clone your SIM, I can intercept your calls. I can read your SMS messages and what comes via SMS.
Two-factor authentication codes.
Exactly. Bank accounts, crypto wallets, email resets, everything in your life that relies on that message, we sent a code to your phone, is now completely compromised. It turns the phone from a security device into a massive vulnerability.
It is the absolute nightmare scenario for a consumer.
And a nightmare for the company, which brings us to the financial impact. SK Telecom booked a massive cost 1.2 trillion won, which is about $863 million for what they are calling a customer benefits program.
And this is where the cynicism needs to kick in. As an analyst, I see a number that big labeled as an expense in a crisis. And my first question is,
where's the cash actually going?
Exactly. Is it actually leaving the bank? Or is this some kind of accounting magic?
It's mostly the latter. So you have to break down that 1.2 trillion won. A normal fine or a legal settlement is a direct cash outflow. It hits the cash flow statement, it's gone.
Right.
But this isn't that. The company's breakdown shows 500 billion won in what they call direct benefits and another 700 billion won in security measures. Let's just focus on those direct benefits for a second.
But 500 billion won?
Yes. They are offering customers things like bill discounts and free data.
Ah, the old free data apology. Sorry, we completely compromised your digital identity. Here's 50 gigs of 5G so you can stream Netflix in 4K while your life savings are being sold on the dark web.
Precisely. But think about the economics of that apology from the company's perspective. What is the marginal cost of a gigabyte of data for a telecom operator that already owns the network?
It's negligible. It's got to be close to zero.
Exactly. The infrastructure is already built, the towers are standing, the electricity is already being consumed, the spectrum is already licensed. If I give you, the customer, 50 gigabyte of extra data, it doesn't actually cost me any cash.
It consumes a little bit of bandwidth, sure, but unless the network is at 100% capacity.
It costs me practically nothing. But on the books, I can assign a retail value to that data, say, it's worth $50, and then I can book that as a compensation expense.
So they're essentially paying the customers back in a currency data that they print themselves, and that costs them almost nothing to produce.
That's the move. It keeps the cash on the balance sheet. It looks like a massive apology to the public. Look at us. We're giving you $500 million in value. But financially, it is a non-cash charge.
And it does two things. It suppresses the earnings number, which actually lowers their corporate tax burden for the year.
And it mitigates churn. This is the really clever part. The customers feel like they got something, so they're less likely to switch to a competitor.
It's brilliant in a very Machiavellian sort of way.
Yeah.
You turn a disaster into a customer retention program. You can't leave us now. We just gave you all this free stuff.
And that is why the smart money didn't just dump the stock on that horrible earnings news. They saw right through the headline number. They realized that the free cash flow, the actual lifeblood of the business, wasn't destroyed to the same extent as the accounting profit was.
But hold on. There is a legal battle happening in the background that complicates this, isn't there? It's not just about giving away data and calling it a day. The government is involved.
Oh, yeah. This is the regulatory fight part of the story. The Personal Information Protection Commission, the PIPC, which is Korea's privacy regulator,
They came down hard.
they slapped SK Telecom with a record fine. 135 billion won. That's about 91 million in US dollars.
And SK Telecom's response is to sue them. To sue the regulator. That seems incredibly bold. You just admitted to losing everyone's data for 4 years, and now you're suing the agency that fined you for it.
Their argument is based on a kind of double jeopardy principle. They are saying, look, we already spent 1.2 trillion won fixing this and apologizing to our customers. The punishment has already been served. Why are you fining us on top of that?
That takes some serious nerve. I already paid my victims in monopoly money, so I shouldn't have to pay the actual cash fine.
It does. But the real legal maneuvering, the really crucial part, isn't about that $91 million fine. The fine is a rounding error compared to the real threat they were facing.
Now, what was that?
The real threat was the proposed cash settlement.
Okay, this is the settlement trap. I want you to walk the listeners through this because this is where the company faced a truly existential threat. This is where that massive $4 billion number comes into play.
So the government, trying to mediate, put forward a settlement proposal. They suggested that a small test group of victims should each receive $300,000, won in cash.
That's about 204 US dollars.
Correct.
Which honestly seems pretty reasonable. If you lost my digital passport and gave hackers access to my bank accounts, $200 is getting off pretty cheap.
It sounds reasonable to the consumer, absolutely. But for SK Telecom's board and their lawyers, it was a poison pill. It was a trap, and they immediately rejected this settlement.
Why? Why reject a small, reasonable settlement?
Because of one word. Precedent. It's pure math. If they accepted the precedent of paying $300,000 won in cash to that small test group, they would legally open the floodgates for all 23 million affected users to demand the exact same payout.
Okay, let's run those numbers. 23 million users times 300,000 won each.
That comes out to roughly 7 trillion won.
7 trillion.
Which is over 4.1 billion US dollars. That is a company-killing number. That is nearly half their entire market capitalization. They could not, under any circumstances, accept that precedent. It would have wiped out years of earnings and potentially bankrupted them.
So by rejecting the small, symbolic settlement for a few people,
they avoided the catastrophic systemic payout for everyone. Yes. They immediately pushed their voluntary package of data and discounts instead. They controlled the currency of the compensation.
And by rejecting the cash settlement, they forced any angry customers into a much more difficult legal path.
That's right. Now, if you're a customer and you're still not happy with your free data, your only recourse is to file a civil lawsuit, either individually or as part of a class action. And in Korea, the class action lawsuit system is much more restrictive and much slower than it is in the US.
So it buys them time. Years.
It buys them years, and it makes the process prohibitively expensive and difficult for the average person. It effectively neutralizes the threat.
So if we're looking at winners and losers here, the winner is clearly the SK Telecom shareholder. You just dodged a $4 billion bullet.
Absolutely. The loser is the customer, who gets some extra data they probably won't even use instead of actual cash compensation. And the privacy regulators lose too, because now they're tied up in a lengthy court battle over a fine that seems almost quaint by comparison.
It is a masterclass in crisis financialization. They contained the blast radius perfectly. They took a potentially terminal event and managed it down to an operational cost.
A non-cash operational cost at that.
So, okay, they've managed the downside. They put a floor under the disaster. But that still doesn't explain why the stock is ripping to new highs. Managing a disaster just keeps you flat. It doesn't make you sore.
Yeah.
That brings us to the real story here. The other side of the ledger.
The hidden assets, the Anthropic thesis. This is the only thing that matters for the bulls right now. This is the alpha. This is the entire story.
We need to rewind the clock to 2023. SK Telecom made an investment, what seemed like a small strategic investment at the time. They put $100 million into a company called Anthropic.
Right. And at the time, Anthropic was just another AI startup, a very good one, mind you, a spunky competitor to OpenAI, founded by a lot of former OpenAI employees like Dario Amodei. But they were one of many.
And SKT's rationale was what? To use their tech.
It was a strategic bet. They wanted access to Anthropic's large language models to improve their own telecom business, for customer service bots, network optimization, things like that. It probably looked like R&D spend on their books. It was a nice to have.
And at that point, Anthropic was valued at around, what, $5 billion?
About $5 billion, yes. So SKT's $100 million bought them a decent little chunk. But then the AI rocket ship took off. And we have to walk through this valuation ladder because the multiplier effect here is just insane.
Okay, lay out the timeline for us.
It's exponential. So let's look at the timeline. In September of 2025, Anthropic raised $13 billion at a staggering $183 billion valuation.
So in the span of about 2 years, it went from $5 billion to $183 billion.
Yes, a more than 30x jump. But they weren't done. Then in November 2025, just a few months ago, NVIDIA and Microsoft came into the deal. They dropped a combined $15 billion into the pot. The valuation hit $350 billion.
$350 billion. That makes them one of the most valuable private companies on earth. And they haven't even IPO'd yet.
Correct. And it gets better. Right now, here in early 2026, they are raising another $10 billion at that same $350 billion valuation. And the round was reportedly 6x oversubscribed. The demand from institutions to get a piece of this company before it goes public is off the charts.
What are their revenues looking like? Is this just hype or is there a real business here?
Oh, it's real business. They're projecting $26 billion in annualized revenue by the end of this year, 2026. This is not a science project anymore.
Okay, so let's do the napkin math for SK Telecom. They bought in when the company was worth $5 billion. It's now being valued at $350 billion. Even with all the dilution from these massive funding rounds, that original $100 million stake has to be worth a fortune.
A fortune. Now, we have to be conservative here because they have been diluted. They might have started with a 2% stake, but after all these mega rounds where billions of dollars came in from Amazon, Google, Microsoft, their share has been whittled down.
So what are the estimates now?
The current street estimates put their remaining stake somewhere between 0.1% and 0.5%.
Which sounds tiny. 0.1% sounds like a rounding error.
It sounds small until you apply it to a $350 billion market cap. A 0.5% stake in a $350 billion company is worth $1.75 billion.
$1.75 billion from a $100 million investment.
And even at the low end, a 0.1% stake is worth $350 million. Still a 3.5x return. But I tend to think it's closer to the higher end because early strategic investors often have anti-dilution protections built into their deals. So if that stake is worth anywhere near, say, 2.5 trillion won, which is about $1.8 billion.
And SK Telecom's entire market cap is what, around $9 billion today?
Exactly. This single investment, this lottery ticket that cost them $100 million, could now be worth nearly 20% of their entire company's market capitalization.
That is the Yahoo Alibaba dynamic. That's the perfect analogy.
It's the perfect analogy. Remember when Yahoo was basically a zombie company in terms of its core operations? Nobody used Yahoo search anymore, but it traded at a huge valuation purely because it owned a massive chunk of Alibaba before its IPO.
Or how SoftBank trades today. It's less about their own operations and more about the fluctuating value of their stake in ARM Holdings.
It's the same playbook. SK Telecom is becoming a holding company for this pre-IPO Anthropic paper. The market has re-rated it.
So the entire investor narrative shifts. You are no longer buying a boring Korean telco with a declining user base and a massive hacking scandal. You are buying a discounted entry ticket into the Anthropic IPO.
You're buying the telecom business for peanuts and getting the Anthropic shares for free, essentially. Or you can look at it the other way. You're buying the Anthropic exposure you can't get anywhere else, and you get a free cash-flowing telecom network attached to it.
And this is the key. Unlike the average retail investor who is completely locked out of buying Anthropic shares right now.
Unless you're an accredited investor and you're willing to trade on opaque secondary markets like Hive or Forge, where the spreads are massive and the liquidity is terrible.
Right. But you can go on your brokerage account right now and buy the SKM ticker on the New York Stock Exchange.
It's the liquidity premium. If you want Anthropic exposure today, and you don't have $200,000 in annual income or $1 million in net worth, SK Telecom is one of the very few public, liquid ways to get it. That fact alone drives institutional flow. It drives the stock price. The algo traders pick up on the phrase Anthropic proxy, and SKM pops up on their screens.
But SK Telecom isn't just sitting back and waiting for the IPO check to clear, are they? It seems like they're using this AI pivot narrative to try and restructure their actual operations. They're actively trying to stop being just a telco.
They are. They're calling it the AI pyramid strategy. Management is explicitly trying to pivot the story away from connectivity, which is Wall Street code for dumb pipes with no growth, to AI.
What does that actually look like on the ground, though? Because every company on Earth says they're doing AI now. It's a buzzword of the decade. Is there any real iron in the ground? Is it just talk?
For SKT, it's tangible in a couple of key areas. First is data centers. Their AI data center revenue grew almost 35% year over year. They just acquired the big Panjo data center, which is strategically located right near Seoul's main tech hub.
And the demand is there.
The demand is insatiable. They are seeing incredibly high utilization rates because, well, every company in Korea and globally needs massive amounts of compute power right now to train and run these AI models.
And selling data center space to AI companies is a much, much better business model than selling SIM cards to teenagers.
Oh, it's not even close. The margins are better, the contracts are longer, and the growth is explosive. A SIM card user pays you, $30 a month? A single data center rack can bring in thousands a month.
Okay, so data centers are one piece. What else?
Then you have a Dot. This is their homegrown AI personal assistant.
A Dot.
Yes, a Dot. It's their answer to Siri or Alexa. It reached 11.2 million users in the last quarter of 2025. And they're not just licensing tech. They're building their own hyperscale model to power it. It's called AXK1, and it reportedly has 500 billion parameters.
500 billion parameters. That is massive. That puts it in the big leagues, comparable to some of the larger open source models out there like Llama.
It does. They are clearly trying to position themselves as the sovereign AI player for Korea. The strategic thinking is they don't want Korea to become completely reliant on U.S. models like OpenAI's GPT-4 or Anthropic's Claude.
They want a domestic champion.
A domestic champion that understands the Korean language and, more importantly, Korean cultural nuance perfectly. And the government is backing them. SKT was selected for the government's 2.5 trillion won AI Foundation model development project.
So it's becoming a national strategic asset. It's too big to fail in a new technological way.
That's a great way to put it. And there is one other piece of this operational pivot that I find fascinating, especially when you consider the irony of the hack.
What's
quantum security?
This feels deeply ironic. We just spent 10 minutes talking about how their security failed so badly they got hacked for 4 years straight. And now you're telling me they're a leader in cutting-edge security.
That is the beautiful paradox of this story. SK Telecom has been, believe it or not, a pioneer in quantum key distribution, or QKD, since 2011. They've built an 800-kilometer quantum network across Korea. They've even partnered with Samsung on Galaxy quantum phones that have quantum random number generator chips inside them.
So they have the most advanced, theoretically unhackable security technology in the world.
Theoretically, yes, and yet they got completely owned via their legacy servers. But here is the brilliant business spin they're putting on it.
Go on.
In an age where even the biggest, most sophisticated telco gets breached for years on end, quantum security becomes an incredibly valuable premium offering for their enterprise clients.
I see. So they can go to the big banks, to the government agencies, to the military and say, look at what happened to us. It was an absolute disaster. Don't let it happen to you. Buy our quantum solution.
It creates a business moat that's built on fear. The world is incredibly dangerous by our impenetrable armor. It literally turns their biggest liability into a sales pitch for their most advanced product. It's audacious, but it just might work.
So let's zoom out and put this all together in a market outlook.
Yeah.
We have the bull case and the bear case. Give me the bull case first. What's the argument for buying this stock today?
The bull case is simple, and it's all about one thing: a liquidity event. The Anthropic IPO is rumored for the first half of this year, 2026. If that S1 filing drops and the valuation holds at $350 billion, or even pops higher in the public market,
Which it probably will, given the hype.
right, then SK Telecom's stake instantly becomes a liquid asset. They can sell it, they can monetize it. It's no longer just paper gains.
And what do they do with that cash? $1 billion, maybe $2 billion in cash?
They could pay a massive special dividend to shareholders. They could do a huge share buyback program, which would boost the stock price. Or they could use it to pay off all the debt they've incurred from the hacking cleanup and fortify the balance sheet. Any of those three options is incredibly bullish for the stock.
And the technicals are on their side.
The technicals look great. The stock has broken out of a multi-year trading range. Momentum is on their side. The trend is your friend right now.
Okay. So that's the bull case. But we have to play devil's advocate here. We can't just drink the AI Kool-Aid. What's the bear case? What could go wrong?
The bear case is legacy drag. You cannot just ignore the fact that the core mobile network operator income fell 47%. The business of selling connectivity is dying. It is a deflationary business with intense competition and regulatory pressure.
And the legal overhang from the hack isn't completely gone either.
Not at all. Civil lawsuits take years to work through the system. There is always a non-zero risk that a judge somewhere in Korea decides to certify a class action for those 23 million victims, completely bypassing SKT's settlement rejection. If that happens.
That $4 billion risk comes right back on the table.
Comes roaring back. And then there's the investor base problem. That dividend cut really scares away their traditional base.
They alienated the very people who owned the stock for decades.
They did. They effectively swapped their investor base.
Yeah.
They told the income investors, the pension funds, the retirees to get lost, and they invited the high-risk, high-reward growth and AI hedge funds to the party. That is a very volatile transition for a stock to make.
And if the AI bubble bursts, or if the Anthropic IPO gets delayed for some reason?
SK Telecom has no floor. The yield isn't there to catch them anymore. If the AI story falters, you're not left with a stable utility. You're left holding a broken, low-growth utility with angry customers and regulators.
That is the risk. You are explicitly trading a safe, boring utility for a high-flying tech startup proxy. If the tech startup falters, you're left holding the bag.
That's the bear case in a nutshell.
All right, let's get to the part everyone is waiting for, the "this is not financial advice" segment. We're going to pitch a trade idea here. And again, let's be crystal clear.
Yeah.
We are just two voices on a podcast. Do your own diligence. This is for educational and entertainment purposes only. Don't blame us if you lose your shirt.
Please don't.
But looking at this unique setup, what is the play? How could one structure a trade around this thesis?
Okay. I call this trade the kimchi clawed arbitrage.
I love it already. Break it down.
The setup is this. Anthropic, powered by their model Claude, is arguably the hottest private asset in the world. But you, the listener, probably can't buy it. You are locked out. Meanwhile, SK Telecom, a Korean company famous for kimchi, is trading at a depressed valuation because of the hack discount and the dividend cut panic.
So the market is still pricing in the bad news of the past, but it hasn't fully priced in the future value of the Anthropic stake. There's an arbitrage opportunity.
Exactly. So the core of the trade is simple. You go long SK Telecom, ticker SKM on the New York Stock Exchange is the easiest way for U.S. and international investors to do this.
You are essentially front-running the IPO.
You're front-running the algo flows. That's the key. As we get closer to the middle of 2026 and the Anthropic IPO mania begins, every algorithmic trading desk in New York, London, and Hong Kong is going to be running screens for Anthropic proxy stocks.
And what will they find?
They'll find Amazon and Google, of course, but those stocks are massive, multi-trillion-dollar companies. A $10 billion swing in their Anthropic stake value moves their stock price by, less than 1%? It's a rounding error.
But SK Telecom is small. It's nimble.
SK Telecom is a $9 billion market cap company. If a few $1 billion of institutional flow comes pouring in, looking for that pure play Anthropic exposure, SKM could double. It actually moves the needle in a big way. You are buying the cheapest, most levered proxy on the board.
Okay, but what about the Korea risk? What about the specific telecom industry risk? What if the Korean government imposes new price caps or the Korean economy tanks?
That is where the outrageous kicker comes in. This is the hedge that makes the trade really sharp. You go short a basket of pure play Korean telcos. For example, you could short KT Corp, ticker KT, or LG Up Plus.
Explain the rationale there. Why short the competitors?
Because the Korean telecom market as a whole is saturated and, frankly, a terrible business right now. It is facing intense regulatory heat. The government is actively forcing them to cut prices to help consumers with inflation. So by shorting the sector via KT or LG and longing SKT, you isolate the specific variable you want exposure to.
You strip out the market beta.
You strip out the country risk and you strip out the regulatory risk. If the Korean government comes out tomorrow and finds the entire telecom sector, your short position makes money and it offsets the hit to your long position in SKT. What you are left with is pure exposure to the AI alpha.
So you're long the hidden asset and short the legacy industry it's trapped inside.
That's the trade. It's a relative value play. You ride the multiple expansion of SKT versus its peers until the day of the Anthropic IPO. And then, and this is absolutely key, you sell the news. The day Anthropic rings that opening bell, you dump your SKT position. Because by then, the arbitrage is closed, the value is realized, and the story is over.
That is a very sharp trade. It's risky, it's complex, but the internal logic holds up. The kimchi clawed arbitrage. You heard it here first.
It is the kind of trade that can make your entire year if it hits. But you have to remember, if Anthropic delays the IPO or if the market turns sour, you are paying carry costs on that short position every single day. Timing is everything.
So to wrap this entire deep dive up, SK Telecom is a company in a dramatic transition. We have a massive profit drop, a massive hack, and a massive pivot happening all at the exact same time.
And management has, at least for now, successfully navigated a $4 billion existential liability risk and managed it down to a localized, mostly non-cash operational cost. They contain the fire.
And the entire investment thesis from here on out is pinned on two things: the AI data center growth story and the Anthropic lottery ticket.
That is the bet. If you believe in the future of Anthropic, you almost have to take a hard look at SK Telecom.
What are the signposts we should all be watching for?
Okay, a few key dates and events. February 11th is the next big one. That's when we get more details from the earnings report. We need to hear more about their dividend policy going forward and get concrete numbers on that AI revenue growth. We need to see if the bleeding in the core mobile business has started to slow down.
And obviously, we're all watching for the S1 filing from Anthropic.
That filing is the ultimate catalyst. Once that date is set, the countdown clock officially starts for the SKT breakout. That's the starting gun.
And finally, keep an eye on the Korean court system. It's a long shot, but if a judge rules that the civil lawsuits over the data breach can proceed as a class action.
That $4 billion risk comes right back on the table. That is the tail risk, and if that happens, the entire trade blows up. So you have to watch your stocks.
Well, markets can certainly remain irrational longer than you can remain solvent, but they can't ignore a $350 billion valuation forever. We'll be watching the ticker.
Always watching.
That does it for this deep dive. Thanks for listening to Talk Tickers.